Hello, today is the 27th of January 2011. Welcome to today's Silver Log. On the web page, I wrote up a short little article today regarding buying silver from your local coin shop that would be available within the log. So we'll start with today's analysis. We're going to go over silver's action today, its intraday crash, and talk a little bit about the gold to silver ratio. We'll start off with the price memory showing a lot to be traded within this 27 to $29 range. And I was stating a few months ago it wouldn't be the worst of things. It might even be pretty good if we can consolidate within a 25 to 30 area. And right now that is coming into play. So we'll start with this 15-minute line chart. And the market yesterday had a nice end of the day rally, and well, it obviously didn't hold. So whenever you see a pattern, I was mentioning this yesterday, where you have a nice little rally and then it really collapses back to where it was, then that's very bearish. Whenever you have a rally like this and then falls back down, that's not bullish whatsoever. And if you ever have a sell-off and then it just comes right back, that's very bullish. So I do think that right now the chances of holding this level is not too good. Most likely it seems as if we have an appointment to not only test this previous low in here, but most likely break it and even head down at least towards where this volume weighted average price is, if not even test the 100-day moving average, which is a shade below $26 per ounce right now because it got above the 5 and it couldn't hold it. So the 5-day moving average is still continuing to be declining. Now, as far as what happened within today's action, this is today's intraday 5-minute time frame. This is simply the SLV shares with the values 2.2% greater than that, which translates it very, very close to the COMEX prices. And well, what can you say? We had this monstrous sell-off, or this decent-sized sell-off, in the late morning, which seen the market go down, which was really about a dollar move within its time frame. So as the market started in the morning, it consolidated within this range, had a decent-sized sell-off here, had a 4-bar consolidation, then 1, 2, 3, 4, 5, 6 bars lower with a consolidation candle in here, really going from about 27.5 down to below 26.80, and from that point it really ranged through time, which is really more of a bear flag pattern more than anything for the market of silver, that is. But there's a big difference within what happened today in gold and what happened within silver, because you see, after it had its late morning sell-off, it really did stay in a new range. Yes, it took out this low, but really was only a couple pierces below it, where gold was a little different today. Gold had its sell-off, and then it ranged through time, and then it continued to trade within a downtrend. So gold was weaker than silver was throughout the day. Now, percentage-wise, we've seen silver lose about $1, pretty much close to about 3%, where gold went from 13.35 down to about below 13.20. So it only lost a little over a percent. So from this point in here, silver was an underperformer to gold, but from this point on, silver outperformed gold. And when we go to a gold to silver ratio, and this is what the last few days would indicate. This is going back to the 18th of January, so this is only for 9 days. And how I've calculated this, I take the GLD shares and multiply them by 10.25 to get me the close price of gold and silver, which is 2.2% higher, and this would get me the gold to silver ratio. So the ratio has been going higher, and that is because, of course, the silver market's selling off. Usually when silver's selling off, usually gold will also, and this ratio will go higher. When they're rallying, usually silver and gold will rally together, but because silver will have a 4% up day, gold will only have a 1% or 2% up day, that would make the ratio lower. But because of the movements, we can see that over the last little while, the ratio went down from close to 50 today or yesterday, down below 48.5. If we extend this further just a little bit, going to back to December the 29th, we've seen that since then. We've been in a bear market for both gold and silver, so thus the ratio has been going higher, making a pattern of these higher lows. We got higher highs, so that's an uptrend. The market is obviously bullish for the gold to silver ratio, and that's just simply because the silver market and gold market are both declining. It's just when it's declining, silver will lose more in percentage gain. Now, as far as the last year or so, this is going back to February of 2010, the gold to silver ratio was trading or was ranging from about 63.5 or so up to about 70, and the market broke out on August the 24th, and it obviously went in a downtrend, and since then it has mainly corrected through time. And but generally speaking, it's going to stay the same way. If the silver and gold markets start to head higher, then this baby will continue its trend and go lower. And obviously, if we continue to see what's happening now, and that is gold and silver selling off, we should get above 50. And the next level would probably be up towards the 52 or so area. My personal belief is that it will not only come down towards the significant 14, 15, or 16 to 1 ratio, but could very easily go with par. This is only my opinion, and my opinion means very little to what the market will actually do. So thank you for watching, and have yourself a great day. Bye-bye.